Hello and welcome back to our weekly market recap. I'm with Rich.
Hello, everyone.
And I'm Knight. Let's get to it. So this past week, we saw the market down 2.31%. We're still up year to date, 5.19%, still up from the old highs back in February, 1.21%, and up from the lows in March, 53.17%. So this past week, we did see a run up in the markets up until Wednesday, and then a pretty swift pullback Thursday and a very volatile day Friday, starting up and then dropping. And some of the main drivers this week were the August unemployment numbers that came out, the tech run up and people locking in gains and maybe getting, out of tech, and then the next round of stimulus and when we might be seeing that from Congress. So Rich, do you want to talk about the unemployment numbers that we saw?
Yeah, the unemployment numbers look very good. There's some question about whether or not the improvement in the unemployment numbers, which is now below 10%, it's 8 and a fraction, is a reflection of people deciding not to enter the work market and not trying to get employed, or is it an improvement because the number of new hires was 1.3 million or 1.4 million, and there's just a question about the overall drop. No matter how you look at it, more people being put into work. That's positive, but there's some question, and whenever markets have lack of clarity, it's usually not good.
Yeah, and I think that's what we saw on Friday. We started actually in the pre-market with all the futures up across the board after the news about the positive August numbers. And then I think as people started to dig into the numbers more, they started to see, oh, maybe part of the numbers came in for the actual census and people being hired on a short-term basis to work on the census, and then also how many of these are permanent job losses. And then even, across demographics, the unemployment dropped to high sevens for your white ethnicity, but if you're a person of color, the unemployment is still, 13%. And so we do see some disparity, and overall that shifted the market. So like Rick said, the positive fact of the more people getting employed, the 1.4 million was more than we were expecting. And so that's positive, but dropping below 10% to 8.4%, are we going to see it continue trending down, or is this a 1 month fix and then we're going to see a spike? And that's what we're, trying to figure out. And that's what the market is as well. So shifting a little further, we've seen the worst 2 days in the NASDAQ basically all year since the actual drop in March. And Rich, what's your take on it? Do you think that this is positive for tech? It was, getting a little bit too far away from the fundamentals, or do you think that, this is the start of the end?
I don't think this is the start of the end. I think that it was a combination of several items, one of which we just finished the end of the month. I think there was some profit taking that was going on because we had such a large run up in the month of August. I also do think that the computer trading was taking advantage of all this volatility and added to that. So some of both the volatility today and the drop yesterday was computer trading, dealing with a lot of the derivatives and options work. There was some talk that it was related to positions that were taken by one of the foreign banks, and one of the Japanese banks had apparently very large option positions, and that was some thought that maybe it was moving the market. Overall, I think some of the pullback is positive. No matter how you look at it, We had a very big run up without any real large down days. And this takes some of the froth off of the market, which means that uh, we may be setting up for another rise, or we have some more losses to go. I'm not sure that way, but overall, the fact that it wasn't huge today after what happened yesterday, I think is a positive sign.
Yeah, well, I think one of the things that we've been calling for, and now we're seeing it, is we've been calling for increased volatility. And you and I, we've been saying that for, the past month. And here it is. It's just, a little bit later than maybe what we had previously expected. But in some ways, especially, as you said, the huge run up in August, to take a little bit of that profit sharing and a little bit of that froth off the top of the market is positive. And I think another big thing is everyone is already expecting volatility when it comes to the election in November, especially around the fact that we're going to have so many mail-in votings, and we might not know who the president is for 1-2 weeks. At some point, if everyone's expecting there to be this huge volatility spike in November, some of that volatility starts to happen before. And I think that's partly what we're seeing in the fact that if everyone's saying, oh, just wait till November, it's not like all of a sudden one day something changes. And the market's a forward-looking instrument. And I think some of the volatility that we're seeing today is the uncertainty of the presidency and especially just around the election itself.
Great point, and I agree with all of that. I also, historically, September has been a very volatile month. A lot of traders go back into the market. I think that that's what we're seeing as well. I think those are great points.
Yeah, and then, the last piece that we want to highlight is, the next round of stimulus. Are we going to see it before the election? I think another piece that really shocked the market today is that the White House and Congress reached an agreement to keep Washington open, which was positive, and yet at the same time, people were hoping that that deal would come with the next round of stimulus. So the fact that they reached that agreement to keep Washington open without coming to any conclusion on stimulus definitely shocked the market in a negative way.
Yes, and I think politically, both sides are hoping that not having a deal will rev up their base, both the liberals and the conservatives of Trump, both the Republicans and Democrats. I'm a little bit disappointed that they didn't do it because I think it's better for the country to have this clarity. Once again, when Wall Street doesn't have clarity in what's going to happen, that's usually a negative for the market. It explains a lot of the volatility today, as well as I think there was probably some indication yesterday that we didn't know about.
Yeah. And overall, even as we see this volatility, I think it is still important to highlight that we are still positive 5% year to date. We're still even 1% above the original highs that we saw, back in February. So overall, the market is still, had a huge run up this year, huge recovery. And even if we see increased volatility through the end of the year, this has still been a very positive recovery. And so just want to highlight this. Just because we had two, tough days in a row doesn't mean that we should all be, fleeing for the hills, hiding our money under our mattress. Not yet, at least.
Yes.
Yeah, well, we want to end this as we always end it. We're here to support you. Your money's here to support you. And, with Labor Day coming up, please enjoy the weekend, have some really nourishing time with your family, friends, and let us know if there's anything on your mind. We'll see you next week.